Hello innovators, as promised, we are back and we want to kickstart things with volume 1 of our new psychology series for YouTube. And in this particular episode, which is going to be more of an introduction and an explanation behind why psychology is so important, alongside various factors as to why psychology is actually one of the core components of your strategy, if not your actual strategy, as you would have probably noted from the title of this video. And what this will serve as is the foundational video for many more of a huge psychology series moving forward.
Yeah, and just to second what Tori just said, it's just this video is to really drive home the importance of psychology. And like we said in our last video, we believe at Innovation that psychology is 80–90% of trading. You can learn the technicals, you can learn the fundamentals, two different styles of trading, or you can combine them. Something we're going to talk about later on in this video. But there's lots of different styles of trading, but it all comes down to your psychology. And that is the make or break for a trader. That is where success or being unsuccessful lies. And it's a thin line, and it's very, well, it can be a thick line because it's very hard to cross it. A lot of people find it very hard to get that psychology factor right. And that is what, as promised, we're aiming to do. We're doing this psychology series to break down the hundreds, if not thousands, of different avenues, different branches under that sort of psychology umbrella, cover all the different topics, and give what our experience on these subjects are, and really break them down and delve deep into them.
Yeah, I'm looking forward to it. I think psychology is something that is so heavily misunderstood when it comes to trading. And it's become a marketing gimmick. It's become this huge buzzword where you just see loads of videos and loads of people talking about market psychology or trading psychology, but no one really understands it at its core. And you can see that, and it's evidenced by the kind of results that people show from the videos they make. It's all surface level stuff, but it doesn't really relate to real world problems and the real issues that we as traders generally face, whether it's in the beginning, middle, or more professional advanced lifespan of our trading career. Very surface level stuff like that is not going to get you very far. We're here to give our real life experiences and really break this down to the absolute core of what is required. And I think this is a good starting point and a very good first topic, because what people fail to realize is that you are the strategy. The strategy is not necessarily just the strategy you apply to the technical analysis. That is redundant. That is worthless and useless if you are not in control of your emotions and your mindset. And people underestimate how much of a crucial factor that really is when it comes to your trading. It's more than a buzzword. It is the make or break between being a failed trader and a successful trader.
And like you just said, very, very well put, is what you often see is surface level. And that's what this series is going to do, is delve deep into the psychology. We believe we've got very, very good experience. We're openly, in our last video as well, explained, we've been through every single hurdle that is taken from being a newbie in the market, all the ups and downs, so many different hurdles that we've all been through. A lot of you watching this video will know all of those ups and downs, but probably a lot of you are still finding it hard to just get that last bit to click and get your psychology correct. A lot of you probably think that you've got the holy grail, or you've got the winning formula, but then you just can't seem to put it together because your psychology is what fails. Your self-control, which is linked to psychology, fails. Many of you probably think that you do have the right strategy, and you do, which is what we're going to talk about today. But it's your psychology that lets you down. So, as the title of this is probably going to say, your strategy isn't the issue, it's you.
That's well put, and you made a very valuable point. No problem. Your strategy is probably working. In fact, even if you're losing, that is part of your strategy's formula to eventually working. And many people really underestimate the fact that when you are looking at a strategy, or you're told a strategy, or you're taught a strategy, the immediate thought about this and why it's so effective to be marketed, and you see this so frequently as the Holy Grail, is because it subconsciously embeds you to believe a strategy is this continuous 100% win rate, never fails, works every single time. That is just not the reality of trading. You are going to lose. Your strategy will always have losses. It comes down to the psychology of understanding that strategy that matters Now, as an example, how many strategies are there in trading, whether it's intraday, intraday, scalping, swing, whatever the strategy is, there are thousands out there. And the brutal truth is, every single one works. Every single one. Yet not every single person can master them. And this is a big misconception when it comes to trading. Me as an example, I'm predominantly a man that uses Fibonacci's and trend lines, notorious for the 78.6% retracement. And trend lines in particular, I am mocked all the time for using trend lines because it's viewed as this very basic tool. But I have just managed to understand and master trend lines to my advantage. But because it is seen as one of the most basic tools out there, it's often mocked. And people really seem to believe that the more complex again, one thing that I'm quite open about is the idea of the smart money concepts. Now, people believe that using something called smart money concepts makes you smarter than everyone else. And it's generally the smart money concept people that mock me for using trend lines. Yet I found success with these tools, and I continuously find success with these tools. And the only difference is I just don't call a trend line a super color fragilistic trend line. I just call it a TL for short, because I'm lazy and I like to make things more efficient. But understanding the psychology of the tool is what makes it effective. And as an example now, you will see many people, not to throw any shade on SMC, in fact, the point here is it probably works. And that goes for stochastics or the Ichimoku cloud, whatever it's called, or anything else for that matter. They all work, and there are many people that are successful with their own individual strategies. But it is not the strategy itself that is actually successful or effective. It's that trader's ability to stick to, master, and fully understand not just themselves, but also the strategy and how it works.
Yeah, like even going back to when I first started trading, with trading, there seems to be like a cult-like situation that goes on. And I fell into the trap at first. Like when I first started learning, I thought that my strategy was the only strategy. Everyone else was wrong. I had the winning formula. If someone else came with a different idea, they were wrong. But as you grow older and mature as a trader, you realize that I have a few different strategies. Some people have more than one or two, like an intraday or a swing. But as time went on, I realized that there's so many different types of trading strategies. Like if you go on to, let's say, Forex Factory in their forums, I'm seeing stuff I've never even seen before to this day, but it works for them. It doesn't mean that because someone had something that maybe have 1,000 lines on it and loads of like rainbow colored different things and spirals. And if that works for them, it works for them. So this psychology series is to start off with this point, is that there is no right and wrong. Just because someone else has a different strategy from you, it doesn't mean that they're wrong. I don't know why or where this has come from, that if someone has a different strategy from you, whether it's more complicated or more simple, why it's wrong. Like we just said, or Tori just said, there's other strategies out there, but we're not saying that they're wrong, because a strategy works if you stick to it. And one of the huge problems that happens is a trader will find a strategy, see that it works for a while, think that they've mastered it, which is also another side topic for psychology, overconfidence, but they'll think they've mastered it, but then what lets them down eventually is controlling themselves and their psychology factor. And then they jump from one strategy to another strategy, and they see that they might have a couple of losses, and then they'll think, oh, something's wrong with my strategy. I need to now look at what someone else is doing on Instagram or YouTube that's showing that they're making millions of pounds really, really easy, and it's like just a simple, something simple or something that's more complicated. So then they think, oh, well, what I'm doing isn't good enough, so they jump to something else. And often what happens as well, again, honest experiences, even in my early days, is I'd look at other strategies or I'd look at different things, and you might have a win or two, and then you'd end up losing, and then you go back to the drawing board and you look back to your original strategy, and I look at the charts and I'm like, shit, if I had just stayed doing what I would have done, stuck with my strategy, I would have caught this trade, but I missed it because I stopped looking at what I would normally look at, and I started looking at these other things, and I wasn't seeing what I normally see. But where if I'd just stuck to what I normally do, I would have had all these other trades. And that's a great example of jumping ship, trying to just jump from one thing to another and not having the patience to stick it out with one strategy. Because again, the strategy is probably not the issue, it's probably your own issue and your psychology issue. You know, if you have a strategy, like Tori said at the beginning, nothing is 100%. And that is something that we have to get across very, very importantly in this video. Nothing in trading is 100%. And a lot of new traders fail to really take that on board and might even throw their strategy out of the window after one loss, let alone 2, 3 or 4. But, you know, some of the best traders in the world, hedge fund traders, anything, you know, you can have a run of 10 losses in a row, but it doesn't mean chuck your strategy in the bin. It just means that the market isn't adapting to you, or it's not suiting your strategy at that moment in time. But it doesn't mean that, you know, all the work you've done over the last 6 months or a year, knowing your strategy works, then all of a sudden, just because you go on a little bit of a losing streak, again, another video we're going to talk about psychology on losing streaks.
It's a good topic.
But just because you have a couple of losses that you think, oh, now what you had is no good, and then you jump onto another strategy, and then you just start that whole process again, and you go off for another, you know, it could be months, could be 6 months in the wrong direction. And if you keep changing to different strategies, you're just going off like a fork in the road in the wrong direction, where if you just stay on the straight and narrow with your own strategy, you'll be far better off in the long run, and you'll be more successful.
Yeah, it's funny you say that, and I think we can all relate to this. We've probably all done this at some point.
Yeah.
I remember there would be times where when I was first getting started, I would like look at a particular strategy, just figuring things out. You'd see all these different alternatives. I'd try one. First trade would lose. I'd be like, fuck that, on to the next. Try that one, trade wins. I'm like, we may be onto something here. Next one loses. I'm like, okay, I'm going to look at another strategy. And you'd be surprised how many people do that. Now, the difference is, what most people fail to realize is that very first strategy you tried just simply needs to be understood, adapted, and mastered over a very long period of time. And that comes down to backtesting and also realizing how much time goes into fully understanding a strategy. Even like Bernie just said regarding losing streaks, a losing streak is not only completely normal, despite what you're told on social media or by the biggest accounts you see, it's part of a working formula as well.
Yeah.
And very successful traders you see will also go into periods where they have losing streaks.
Of course.
That doesn't necessarily mean the strategy itself isn't working. It could either be a pure psychological issue, and more often than not, when you go into a losing streak, if you go back and backtest and journal and look at what you've done, it's often because you haven't actually stuck to the formula of your strategy, and you've often deviated, or in some cases, it simply just doesn't work out. The market is this entity that is far beyond your control. It will work most of the time, and that's the key behind a winning strategy and formula as well. It's not necessarily just win, 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 but it's how you handle those losses through risk management and various other factors as well. But just to throw it out there, it is completely normal to go on losing streaks or have trades that do not work out, but that shouldn't invalidate your theory of a working strategy. And in fact, as long as you have weathered and controlled your risk, this is also another issue probably for another video, but the issue for most people is during that period where you have built so much confidence during a winning streak and have full 100% conviction this strategy will never lose again, you generally tend to up the risk and over leverage, and then
too confident.
In that period of what could be maybe 6 winning trades, it could take 2, 3, 4 trades to completely obliterate your account or set you back to ground zero. And that is, again, not the strategy itself, but it is you as an individual who has made that choice.
Yeah.
So go on.
Yeah, no, this is very interesting. I'll tell you a real life experience of what used to happen to me, just on the back of what you said. So when I first started trading, like about 3-4 months in, I'm not actually probably a little bit longer, but when I first started my live account, trading demo at the beginning, obviously not very real, you have no real feelings. But I started trading my first live account, and God, like honest truth, this is what used to happen to me, and I don't know why I kept doing it. And I went round in circles with this for a good few months. What happened is on IG Index at the time, the most I put like a couple of thousand in an account, and the littlest you could place on a trade was £1 per pip. It wasn't MT4, so it wasn't a lot size. So I used to place £1 a pip on a trade, and I was big into swing trading, still am. but I used to have swing trades, and I was working at the time still as well. So I'd have trades on, but I'd be working, and which is another thing we're going to talk about in the future on a psychology video. But I wasn't watching the charts as much. So I'd be at work, looking a bit on my phone. But you know, even back then, showing my age again, you couldn't really check it on your phone as much with charts because phones were quite a lot older back then. Was it like before, at the beginning of iPhones were older? But what used to happen was I'd have like, let's just say 10 trades. I'd have 9 winning trades, and I'd have £1 per pip, and I'd be making like 100, 200 pound per trade. So it was like 200 pips. And so I'd be taking these trades at work, coming home, making good money. And I was like, well, if I'm able to do this placing £1 per pip, why don't I just do £10 a pip? And every single time I'd put that £10 a pip trade on, and I'd basically blow my account or have a massive loss. And I was like, but why does this keep happening? So then I was like, it must be a once off, because, you know, I won 9 trades, and that one trade it took me back. So then I'd go through the same thing. My strategy was okay, but my psychology wasn't there. So I'd win like maybe another 5, 6 trades, and I'd be like, right, I can't lose. I'm winning every single trade. I'm making 200 pips per trade. So then I'd whack on £10 a pip, like a full lot, and then I'd lose that trade. I was like, why does that keep happening? The one trade that I keep going higher leveraged on, why do I keep losing that trade? Like, it can't be a coincidence. So then obviously it was a learning curve that made me realize it was the psychology behind it, because I was used to £1 a pip fluctuating, you know, 10 pips is £10. So I could let this run. And this is often why people can't swing trade, because they over leverage. I could let these run. Remember, this is when I first started trading. So I'd let these £1 a pip trades run for a lot longer, and I wouldn't be caring about the fluctuations, because it would only be going up £20 or down £20 and eventually get into the 100, 200. But then when I was doing the £10 a pip, you know, I'd be at work, but I'd be checking my phone non-stop. Like, oh, I'm up £100, I'm down 200. Oh my God, I'm in a loss, moving my stop loss, doing all the typical beginner retail trader rubbish that we do. And it wasn't my strategy that was the problem. It was me, it was my psychology, because as soon as I started over leveraging, everything goes out the window. Like, you can't think straight. You know, when your heart sinks because you're down like £200-300 and you can't even, your strategy goes out the window. But as you said, that was part of the working strategy, because if I had even 2 losses out of 10, that is amazing, like an 80% hit rate. But then I was still losing and blowing accounts because I was over leveraging, or I couldn't control myself. And I was just like, couldn't control the greed of wanting to go for more money, even though I was already making good money, or thinking, oh, I'm great at this now, so I can do whatever I want. And that's where, with these videos we're going to talk about, we've got so much personal experience that we'll let you in on. And, you know, we're all the same. A lot of the issues that we'll talk about, you guys have been there and done it and might still be making it, which is why we're doing these videos. But that was a major psychology issue. Just going back to what you said is like, but that was a winning strategy, but the losses are part of that. And what I mean by that is, nothing in this market is 100%. And if anything to take away from this, if you're a new trader or been trading for a little while, is accept that you're going to lose. I found that tough for quite a while, because a bit of a perfectionist, that's just my personality. So I like everything to be perfect, a little bit OCD. So that's why like sniper entries came from. But I didn't like having a losing trade. So if I had 1 out of 10, for me, it would still sort of piss me off. But then I had to, over time, learn, what am I doing? I know that I'm going to lose a trade. Wake up every day and say, I expect to lose. Because you're trading, one of the most difficult things to do is trading the financial market. So if you accept every day there's a possibility I might lose, you'll have the correct risk management, and you'll look at the market the right way. But when your psychology is wrong and you're just expecting to have a 100% win rate, you know, you make all of these other mistakes.
Yeah, and actually, first of all, that's a very interesting point, because me, myself as well, and I'm sure everyone here has done this, when you start off on demo and you get into a strategy, there is no emotion involved whatsoever in theory, because it's theoretical funds.
Yeah.
And you can be the best, most successful trader in the world on demo. The exact same formula, the exact same strategy, the exact same rules. The minute you go live, there is a high probability you will lose a trade. Even if it works perfectly on demo, what has actually changed if the strategy itself has not changed whatsoever?
This is
what's caused the loss.
This is a perfect example of what we're trying to get across, what you're getting to.
Yeah,
Go on.
it's the fact that, let's just say you have a strict formula on demo. You've tested it for 2 weeks straight, 70% win rate, even a modest, I say modest, 70% win rate, not 100 to RR. But the minute you go live applying the exact same formula with the exact same rule set, guidelines, strategy, the same setup appears, and you go and take that on a live account with your own hard-earned money in that account, there's a higher probability you will lose. And why is that?
Most people do.
Yeah, and most people do. And I would argue all of us have done this. If you haven't, you're probably lying, because we've absolutely all done this. And this is also a problem that many people have with funded accounts. A lot of people are actually more successful trading funded accounts because subconsciously you almost know it's not your own money.
Real, yeah.
And I've seen funded traders go live and not repeat those same results. Because subconsciously, when, as an example, you get access to a $100,000, pound, euro, whatever it may be, funded account, you eventually scale that up to $1 million. It's significantly easier to trade when you know the risk of losing that capital does not fall onto your head, especially if you pay like £1,000 or $1,000 for a £1 million account or a £100 account or a £100,000 account. When you've spent significantly less money, subconsciously you understand that the biggest risk you have taken here and can take is £1,000 or dollars, versus putting the equivalent of your own money in of that quantity. It changes the entire game.
Yeah.
And a lot of newcomers do this as well, where there's people who already have access to that kind of money, and they may not necessarily care about that money. It may be a small fraction of their net worth, but those people will put in 100 grand of their own money and blow it straight away at the click of a finger, because they just do not have a grasp of how to operate that kind of money.
Yeah.
And even operating and handling increasing volumes of capital is a psychological hurdle in itself. And this is why we always say that you are essentially the strategy, because the entire operational basis of that strategy is simply dependent on your ability to stick to that strategy. Like Bernie said earlier, there are traders out there that have more losses than wins but are still profitable.
Yeah.
How is that possible? That's because they control their risk like a fucking professional.
And they stick to their strategy to the T. They don't change anything. If they're losing, they're losing. They don't change their strategy or start thinking what else could they do. Like, there is very successful traders out there who might only have a 30 or 40% win rate because of risk reward and sticking to their strategy and not doing any stupid dumb shit, basically, like over leveraging, moving stop losses, having different risk on different trades, etc., etc. But they are winners in the long run, and because they stay on that straight and narrow, and it's almost like the slower move, like the tortoise and the hare, basically. But the tortoise is moving slower, but it stays on the right track and wins the race in the end, because no matter what happens, they don't deviate away from their strategy. They don't look at what else is going on. They know that there's going to be times where they'll have a higher win rate, and sometimes they might lose more, but as long as they got the right risk reward, that they'll come out on top at the end of the day. But they don't deviate away from their strategy, and it's so important to just drive that fact home, that, stick to your strategy. If you've already back tested your strategy, or you've been winning with your strategy and you think that you've got a good strategy, just stick with it for 6 months, stick with it for a year. That's the problem, is that a lot of people have short attention spans these days. So, and it's a world full of so much, external influences, that their attention span then goes to something else on Instagram or YouTube. So it's very hard to stick with something for more than a few months or for more than a year, especially if you have a rough period. So we understand why. We're not saying it's easy to do, but we're here to tell you that this is what you should do. But if you can stick with that for a long period of time, you'll find that it might be slower through some periods, but the long run, you'll be leaps and bounds over where you would be if you keep diverting and taking different strategies. And sorry, just talking a bit much, but something I always talk to members about is the fact that, what you need to look at the market, you know, as I said, external influences, you'll see that people are making this much every day, and everyone, it's all sunshine and rainbows because everybody's making so much money on Instagram and Twitter. But but obviously that's not real. But what I explain is, you know, look at your trading on a yearly basis. So think about the whole year. So that's 12 months. Not week by week or day by day, hoping to make a lot of money one day, or you know, you're fluctuating on a daily or weekly basis, or even monthly. Think about it as a year. Now you've got 12 months. Now, let's say in January, it's the beginning of January. Are you telling me that you think you're going to win every single week, every single day, every single week, every single month between January to December? No, when you zoom out like you would on the chart, you can see that some point in that 12 months, you're going to have a bad month. So does that mean your strategy is wrong? Just because over a longer period, nothing can work 100%, but over a longer period, in that 12 months, you're going to have a great month. Let's just say in March, you might have like 20, 30% or whatever. And then you're going to have a month where you might lose. By sticking to your strategy, you might lose 5 or 6%. You might have 4 or 5 losses or 6 losses, but you won't lose much because you keep to your strategy and you only risk the minimal, you only risk 1%. But just on a zoomed out view of the whole year, do you think that every single day or every week is going to be profitable? Do you think every single month is going to be a good month? So if a good strategy for some people is lower than a 50% strike rate, but you know, a great strategy is 70, 80, 90%, not often found. But say you have an 80% strike rate. So 80% of a year, that means you have to have 3 or 4 losing months. So if you have your strategy and it's winning one month, but then you go on a loss on another month, does that mean that you change? No, you stick to the strategy, because over a longer period of time, you're going to win 8 out of the 12 months. Or you're going to win 10 out of the 12 months, but there's going to be bad times in the market. And as we said earlier in this video, you have to understand you are going to lose. You have to accept that losing is part of this game. It's part of the parcel. So understanding that in your psychology, and understanding at any point you could have a good month, at any point you could have a bad month. But sticking to your strategy will take you through the bad times and make sure you're still there for the good times. What the market has, I say this to members as well, the market has a very, very good way of doing this, is that there will be times that the market is bad conditions and it will flush a lot of retail traders out, and they always miss the party when it starts. So another thing that you've probably seen is that you probably, as a beginner, have been through where you're jumping from strategy to strategy, but you're having a loss or you get blown, your account gets blown. But then all of a sudden, all the opportunities where you would have made money come through. And it just seems that you just get blown, your account gets blown, or you have a big loss because you made one of those mistakes. But all of a sudden, after that high or low gets taken out, or you come back a week later, there's setups everywhere that you've missed, but you can't take them because you've blown your account. So it has this way of flushing you out the market before the party starts. And then next thing, all the opportunities come at once. It's like what I say, like sometimes you wait hours for a bus and then 3 of them come along at once. It's the same with trading. Sometimes, you know, you might have some losses, you might have some times where there's no trades, but then they all come at once when the party starts, because the market starts moving. So you got to have the psychology to understand there's going to be bad times, there's going to be great times, there's going to be mediocre times as well while you're waiting around. But just having that mindset on a yearly basis and understand that if you have a rough month, there's nothing wrong with you. It's, you know, sorry, I should say there's nothing wrong with you. There's nothing wrong with your strategy. So if you change it, then there's something wrong with you. Yeah. But stick to your strategy and ride it out and stick with it for 6 months to 12 months, and you'll see that stick with it and you'll be far better off.
It's true you mentioned that, actually. And to be fair, I think what makes trading so difficult, we may have mentioned this before, but Bernie mentions this a lot and so do I, but when you go onto most brokers' websites or platforms, whatever it may be, there's generally a warning sign, right? And it will tell you
at the top, across the top, like a banner.
Yeah, and they'll legally have to tell you that 96% or 93% of traders lose with this particular spread betting account or this CFD account. And when you actually assess that, and first of all, it's not to scare you away, but it's to make you realize that the majority of people lose. But I've kind of come to the conclusion over the past 10, 15 years now that those people are not losing because they're shit, because they've got this, they haven't acquired the Holy Grail, they're not doing backflips in the morning prior to trading or meditation or anything like that, but it's because they just give up and quit. And it's because they probably have found a working formula. And again, in all honesty, any strategy you find out there can be mastered mentally. And once you understand it mentally, you will be able to achieve it physically in the trading world. But most of those individuals are either blowing their account from over leveraging or just not fully understanding a strict psychological strategy to enter in, exiting, and basically a rule set that you actually stick to.
Yeah.
So most of those people blow the account, quit, and that contributes to that percentage. That's why that percentage is so high. It's because so many people just give up and quit.
Yeah.
But social media 100% plays a role, and it has changed the whole game, as we said in our introduction video on the very first one. The reason being is things are different now. You are so exposed to, you must remember, they're even called, like Instagram as an example, they are called highlights. They are, as an example, a specific area where you can choose to post specific highlights, not negatives, not low points, highlights of your life. That is social media in a nutshell. And you can be easily blinded by someone showing a 1 to 100 RL. You will see that and think, fucking hell, I need that continuously. What you're not seeing is the fact that that person's probably lost 15 trades before hitting that one trade. And that is a continuous cycle. And a lot of the time, it's not even real anyway. Yeah. I would actually argue more modest targets, even a 1 to 2 RR, is more favorable than trying to chase a 1 to 100 RR consistently, because it's not a guaranteed system and it's a higher risk system. That is also the problem here, is many people are looking for that quick fix. And this is also applicable, of course, to crypto. My formula is a bit more of a long-winded game. I play weekly, monthly timeframes. And because so many people in crypto are specifically oriented towards quick riches and pursuing whatever chase and pump they can, they don't realize in the long run, what feels like it's working in the moment is actually affecting them permanently in the long run. So we could use current examples where, let's just say I'm waiting for price to come down to a specific level. In the period of me waiting for price to get down in that level, and price may push higher sometimes, there will be people that have maybe taken a long or bought spot. As let's say I'm waiting for this price and price goes up there temporarily. In that moment of the roller coaster going upwards, everyone has that temporary sensation of success. But most of the time in crypto, those people end up getting liquidated or not realizing any of those profits. And by the time price gets down to where I want it to go through the art of patience and sticking to my particular formula, I'm not only still sitting on money that those people have lost, but I'm then able to leverage those opportunities. And it's essentially exactly the same as what Bernie said regarding Forex. Let's say you blow your account. And like Bernie said, the moment you blow that account, the market seemingly opens the gateway to all of these opportunities. And suddenly you're like, what the fuck? Every single trade here is perfect. I could have caught this, I could have caught this, I could have caught that.
If I'd stuck, you say to yourself, if I had just stuck to what I would do, I would have been winning now.
And what's interesting is sometimes the market hasn't actually changed, but you blow in your account, essentially factory resets you back to zero and your clarity returns in that moment.
Yeah.
Because you can become so fixated on those losses. Let's say you've gone from 3 wins in a row. Now you're on 7 losses in a row, but you're not just risking 0.5, 1 or 2%. You're going heavier and heavier and heavier, and you're getting into a deeper hole. The deeper that hole goes, the more engrossed you are becoming and losing rationality. And it often takes you blowing an account for you to almost just go, and then you reset and go again. And then suddenly you forget that it is essentially like having a panic attack. It's almost like you are so engrossed in trying to recoup. You've lost all your strategy, you've lost all your formula. And once you finally just, your account's gone, everything's gone, you no longer need to trade. It's almost like the veil lifts and you're like, oh shit, that is a clean setup right there.
Yeah.
And that's the key behind this as well. It's having no emotions in any of this whatsoever. Your reaction to a TP or anything of that nature that results in a profit should be exactly the same as a loss. You should be neutral and emotionless with both. And that will significantly improve your trading alone. and help you actually evaluate a strategy. And just to, sorry for yapping away,
That's all right.
but
Yep.
to add on to your point, a strategy cannot be determined, like Bernie said, in the span of a single month. A strategy could take 5 years to truly understand if it actually works. In that window of time, what's important for you as well is to not compare yourself, your results, your money, or anything to anyone else, because that will deteriorate you. There are times when I first started, or I'm sure you guys have probably done this as well. Let's say you've taken a long and the market's gone the opposing way. And then you go on Twitter or you go on a forum and someone's taken that opposing trade to perfection. And they're using some kind of super color fragilistic rainbow indicator. And you're like, I need that now. And then you start pursuing that path. And then you start looking at that person's strategy. And people fail to realize that there are times in the market where you may catch the correct direction and someone else will catch the incorrect direction. Now, this is key to understand. There will be days where you lose and other people win. But you must not look at that and think that that person is the winner and you must follow that strategy.
Yeah.
Because the next trade may come and you will deviate from your strategy and you will be correct. And that's very important to note. When you see someone else winning on a day you're losing, or someone else losing on a day you're winning, do not let that get to you emotionally or also boost your ego to think you're better than the other person either. Because it's so easy to be deterred. And as an example of that, that person could be, let's say you've had a winning day and the other person that you're seeing online has lost. They may be at that phase of their overall yearly projection where they've had that little 2, 3, 4% loss. Yeah. But simultaneously, your 2, 3, 4% loss as part of an overall 80% win rate could be happening in that moment as well. So on those days where you do feel you are losing or you've gone into a losing streak or trade after trade has failed, just remember, in the grand scheme of things, it's a very small window in comparison to the overall bigger picture. Before I just add to what you said as well.
But I think along with, as I said, it's easy to say these things, but we want to talk about them because we've been through it and help guide you guys through it. But, with psychology and not where you were saying to not be emotional when you have a loss or a win, but that comes from the psychology factor. Like as Tori just said, if you're seeing someone else have a win, etc., and you're having a loss, to have the mental, what's the right word? To have the mental fortitude, yeah, or just to have that mental strength to not jump from what you're doing. You have to sort of be a man on an island, and that's why it's so hard these days, because there's so many other influences that affect, or external influences that can affect you. But it's to have that strong psychology, and this is why we want to do the series, to build up your psychology so that when these things do happen, you don't deviate away from what you're doing. It's very, very hard, especially in today's age with so many external influences, to not. But the emotion and not have the emotion about having a loss or a win comes from the psychology, and having the correct psychology is all linked. And just going back to what you were saying earlier about, when you are having a loss, and you might be trying to say the market's going up and you're short, and then all you can see is that this should be short. You start adding positions, you start moving stop losses, and it's just getting worse and worse and worse. And all you can see is that this should be short. And then you blow your account, and you have that panic. The panic's over. Then you look at the chart and you go back to your original strategy that you deviated away from, and you're like, oh, you've gone and had a factory reset. You're probably doing a different strategy. We've had a factory reset now. You've blown your account. You look at the market and you're like, hold on, that was a long. Why the fuck didn't I go long? Like, if I had just stuck to my old strategy, that was obvious. Yeah. I can see it now. It's hit this, it's hit that. Why did I not do that? Oh, I'm not doing that anymore. I'm going to do this now. And it jumped from one to the other. But in that whole ball of emotion that we just spoke about, which we've all been through, what the easiest solution to this is just have the mental, what was the word I used earlier?
What I used? Bullshit.
No.
Or was it something else?
The
courage? Strength?
The strength, yeah. To have the mental strength to stick to your strategy, and just rip the band-aid off straight away, basically, and have that 1% loss. Don't do and have the strength to not do these things. And that is what's stopping so many of you from being profitable. And I know this probably hits home, might be not nice to hear, might be good to hear, but so many of you will be profitable if you just take that 1% loss and don't do those silly mistakes. Just have that loss, and just like what Tori said, when you blow your account and all of a sudden you can see the market for what it is and your old strategy would win, the same thing happens if you just take that 1% loss. Because rather than getting stuck into holding positions and adding positions and blowing accounts and having big losses, if you just stick to that 1%, you might be going against you, and you're at that moment you might be thinking, no, that this should be short, this should be short. But as long as you just lose that 1%, you can be wrong and you can go again. And then just like when you blow your account, if you just have that 1% loss, you reset. But at least you've got your account this time, and you can stick to your strategy. So you say, all right, I've had a loss, what went wrong there? And then you look at the market, you're like, oh, actually, yeah, I missed that. Okay, that was my fault. Like, you're still sticking to the strategy, but you might have just missed something. Maybe there was a reason. You made a mistake. We're humans. Another thing, you're always going to make a mistake. You might just have a loss because you're a bit tired one day, you didn't notice something or something like that. But as long as you just take that 1%, you can factory reset and see the market for what it is, and then make the right decision. You might then say, oh, actually, yeah, this is a long, let me enter long now. And then you make that 1% back instantly. And then you might make 4 or 5% because you're seeing the market for what it is. So if you think about every time you've held a loss and blown an account, imagine if you just took the 1% loss and changed your view on the market and took the opposite trade. Imagine how much money you would have made.
I feel that a lot.
Like if you've held a bad loss, we've all been there, we've all done that. And what if you just cut that short and had flipped your bias and gone the other direction? Imagine how much money you could have made holding that trade. And another thing, what I always tell members as well, and the issue with retail traders is retail traders won't cut their losses early. They'll hold their losses. But when they go into profit, they cut their profits early. The key to success is that having the right psychology, sticking to your strategy, and also risk reward. Cut your losses early, keep them to a maximum 1%. And then when you're in profit, have the mental strength to hold that trade. Believe in yourself, trust in yourself. But again, things we're going to talk about in the future, the reason that you're probably not able to hold that trade is because you're probably over leveraged. Going back to my story earlier, I was able to hold trades when I first started trading because it's only £1 a pip. So I didn't care about the fluctuations. Every trade you take should be like that. You should be able to have the fluctuations of the trade going up and down and not care, not have emotion, and have the mental strength to not worry about these fluctuations. But what happens a lot is retail traders, they over leverage, or they're too invested with the money they've lost, or they've had scars from blowing accounts before, and they're scared to take trades, and they won't let the profits run. But often, if you let the profit run, it will keep going, and you'll make a lot of profit. Just like when you're on a loss and you're holding it, and it keeps going against you, and it won't stop going against you. You can't stop being in drawdown, and then you blow an account. When you're on the right side of the market, hold a profitable trade, just like you would hold your old self would have held a losing trade. We've all been there where we've held losses for days, weeks, maybe even months. But when you're in profit, you won't do the same thing, which is crazy. So next time you're in a winning trade, believe in yourself more, and then let the profit run more to make more profit, and let your strategy play out. Because again, the problem isn't the strategy, it's you. Because if that was on a demo account, you'd probably let that trade run much longer because you have no emotional attachment to the profit that you're seeing or the fluctuations. The same goes if it was an amount that you don't really care about and you're not over leveraging, if it's just 1% risk and you can allow that to run. But again, another example of the strategy isn't the issue, it's you as a trader, it's your psychology. Because when you might be in 10% profit, then it comes back down to 5, you start panicking. We actually had a trade this week, GBP USD, it went down to 4%, went back up to 2%, went back down to 5%, went back up to 3%. But it was like, and then eventually hit 8%, we took profit and we got our profit. But we weren't worried about the fluctuations because you're confident in your trading and having the mental strength and psychology to say, no, I know the market's going up and down and being a bit wild, but I believe in my strategy and I'm not going to change. I'm not going to let my emotions affect what's happening. Believe in your strategy and don't let yourself, destroy what a good strategy could be.
Yeah, and this is actually something that causes most crypto traders to lose as well, because whilst a lot of crypto traders obviously trade with leverage as well, a lot of them trade with spot. And when you assess how most crypto traders operate, it is entirely based on an operational basis. It is, again, fear or greed that dictates their decisions. And when you look at the general characteristics of most crypto traders, there is not necessarily a strategy. It is more an influence of social media or what people around them have told them, and reacting in that very moment out of nowhere. So as an example, a lot of crypto traders, what is their strategy? It is market pumps, monkey see green candle, monkey buy, monkey see red candle, monkey sell. And there is no formula or strategy behind that. And when you actually then look at the outcome of most crypto traders, it's losses. People holding portfolio losses for weeks, if not months on end, watching it bleed until they eventually capitulate. But what has made them do that, and how have they put themselves in this outcome? The problem with crypto traders is they never normally realize the mistakes they've made until it's far too late and they're at the point of no recovery. When you think about what makes someone buy Bitcoin at all-time highs as an example, is there a strategy behind that? Most likely not. It is an external factor or a complete lack of strategy and emotional control that leads you to make those reckless decisions. And it's similar to blowing an account where your portfolio eventually gets to such a low point. You then realize in that moment, once you eventually capitulate, your clarity then returns back to you. Me as an example, how I've managed to stay afloat through a lot of these cycles is part of my strategy is having a delicate split balance between capital within the market and capital outside of the market, which many people call sidelined. Now, even the immaturity of crypto as an example, because it's operated a lot with this childlike culture, even if I have 6 or 7 figures invested in the market, I am considered sidelined a lot because I have not gone all in. And it's a very common reoccurring theme in crypto to go all in, and people will mock you. You will be mocked in crypto for not investing your life savings or remortgaging your home or selling a kidney or going all in. And it's actually encouraged in crypto to go all in. That is financial suicide. And part of my strategy, which has helped me not only stay afloat and survive every single cycle, but also stay calm. For me, once I understood that I am the strategy and my mental strength and fortitude is the strategy, I found the solution to that. And that's by keeping cash always on the side. Because in those moments when the market crashes or you see a big red candle or a COVID FTX style situation happens, at that point, most people are fully all in within the market. And there is no easy way to maneuver and navigate through the market when you are fully exposed. The moment you go all into the market, you really can't control the market. But once you go all in, you are adding an extra layer of just going full YOLO, full send. You're now a slave to the market. Yeah. Every single swing up and down, you are stuck there, glued to it. And it's essentially, the market graph becomes your heartbeat monitor. You move in symmetry, your heartbeat moves in symmetry with the market. But something as simple, which is very frowned upon for some reason, keeping a bit of cash on the side allows you to ensure you are, number one, protected when the market goes down, but also you mentally can weather that drawdown. You can actually go into drawdown and know that you still have more money left. But for most people, unfortunately, part of the strategy is go in, all in, pray, and when it doesn't work out, lose everything. And that's something that really needs to change in the crypto space. And I thought I'd tie that into what Bernie says, because crypto is far beyond just simple leverage trading as well. There's various factors to that, which we'll discuss in future videos. But spot trading, there is this huge, monstrous belief that you must be all in at all times. But that is not a strategy. That is pure gambling. And understanding how to navigate the crypto market with the utmost safety, again, what my strategy is, which is quite uncommon, is I don't necessarily prioritize the focus on winning. I prioritize the focus on minimizing losses. Because the risk is amplified, part of my strategy is factoring that in and ensuring it's the smoothest journey possible. And something as simple as just keeping a bit of cash on the side can completely change how you operate and maneuver in the crypto market as well.
Yeah, I think, just hearing you speak and from what I see, obviously I leave crypto in this man's very capable hands. But I think that when it comes to crypto, that there is no strategy a lot of the time. you know, there's a huge amount of people who do invest in crypto who have probably never even looked at a chart. You know, some people just chuck money in and hoping, like, as you said, monkey do what monkey see, green candles. But yeah, I think with crypto that there's a lot of no strategy to it at all, and therefore it's all completely psychology based, because they have absolutely no idea what could happen next. You know, you're leaving yourself vulnerable to anything that the market does. And where you don't have an understanding or a strategy, if it goes up, you don't know what to do, even if you're in profit, and if it goes down, you don't know what to do. And a very random thing that I just thought of while you were speaking, just thinking about the external influences of today's world that we spoke about. Crypto, I wonder that if we lived in a world where you could trade crypto, but you could never see what other people made, and you know, you had no access to the internet. I know with crypto you couldn't do that, but I'm just saying, let's just think if there was no social media and you couldn't see what other people were making, that if you invested in crypto and you were up like 1,000%, and you didn't know that other people might have made like 10,000% or something, as soon as money goes up and you're seeing this incredible amount of money, life-changing money go up, you would take profit. You wouldn't hold on as much.
Yeah.
But I think people hold on because, you know, for example, is it Dogecoin? Like the documentary that you can see on Netflix or whatever it is. But you see all these stories about people who become multi-millionaires, or people like every crypto millionaire buys a Lamborghini, and like everybody wants to hit that stage. It's like the forte for a lot of crypto investors. They think like, that's the life I want to get. But if they never saw any of that external influence, then you were just sitting at home, you never saw anyone else what other people made, and you put 1,000 or 10,000 pound into the market, and suddenly you're up 100,000 or 200,000, you would take that money because you wouldn't be
100%.
comparing yourself to other people. And again, that's the psychology factor. And going back to trading, that's almost how you have to be. You have to block out everybody else. Like, you shouldn't really be following these influences that you half know are lying to you, you know, turning £100 into 1,000 or 1,000,000, or cars, Lambo. We know most of it is rubbish, and you half know that yourself anyway, but you still follow these people. But you don't realize the damage it's doing to you by following this, because it's entering your subconscious mind. Again, something we'll delve in deeper, but you have to basically shut yourself off from the outside world, because it's really deep rooted. I don't think everyone understands how much these external influences are deep rooted into your subconscious. And then when you're trading, you know, everybody's trying to hit these levels that you've seen on TV, Instagram, Twitter, YouTube, and you're subconsciously like trying to go for that, you know, the end run, or what is it?
The home run?
The home run, sorry.
The home run, good.
But you know, or like the jackpot trade. Like, everybody wants to wish that, yeah, this is that trade where they make X amount of money. But you know, again, that's because you're watching all these things and you're taking these forks in the road, where if you just stay on the straight and narrow, do your strategy. And it might take, you know, you think that you're going to be able to obtain these things quicker by jumping ship and jumping onto these things. You think, oh, they're able to do this, or they're showing me they can do that. If I jump on board, I'll get this quicker. And obviously, we're hardwired to want things quicker. It's just humans. But so it's hard to go against it. But if you stick on the straight and narrow, you'll see that if you just do you, square off what everyone else is doing, just stick on the straight and narrow, all these people that are doing all this other stuff, you know, in 6 months or a year, you'll be way past them. They might still be showing this fake stuff on Instagram, or people you know who are trading, who are jumping from strategy to strategy. They'll fall by the waistline and become part of the 90% that Tori said is on the Forex brokers and even crypto brokers, saying that 90% of people fell. But if you stick to your strategy, stick on the straight and narrow, block out everything else, I'm telling you, 6 months or 12 months, you'll have come so far. You'll look back in 12 months and be like, oh my God, I can't believe how that worked. How I just stuck to my guns, stuck to risk management, stuck to my strategy. Risk management is sticking to your strategy. And you'll look back in 6 months and you'll see the growth. And then it's just exponential from there. You grow and grow and grow. And just going back to what I started off with, when I started trading £1 a pip, that was good. I kept over leveraging because I was like, I don't want to trade £1 a pip, you know, the ego thing, because it was the lowest I could trade on that platform. So I wanted to do bigger. But I kept getting humbled by the market, and it was the best thing that happened to me. You have to learn from these lessons. But I was trading £1 a pip, and I stuck to my strategy for the next, I was like, the next 6 months, I'm going to stick to my strategy. I'm not going to over leverage. I'm not going to do jump strategies or do other things. I'm going to stick to what I'm doing. Then like by month 2, I was able to go to £2 a pip. Then by month like 3 or 4, I was up to £5 a pip. Then by like 6 months, 8 months, I was up to £10 a pip. I know it doesn't sound glamorous, but I was making consistent trades. I wasn't having many losses. And I had made, even though I was trading a lower amount, I made so much more trading a lower amount in 6 months than I had previously before, because I had lowered my risk, but I'd built myself up slowly, like from the demo account to a real account. But I started off at that £1 a pip, then 2, then 3, and then I did get to the £10 a pip. And then my psychology was fine because I'd built myself up. I wasn't jumping from one to the other. And then I went to £20 a pip, then 30, then 40, then 100, and then more and more. And the psychology factor, now I look at the market, I can be up or down. You know, I'm probably like a robot, don't have any feelings anymore. But it's because you've done it the right way. You stayed on the straight and narrow. There wasn't these big leaps and jumps from this to another and changing strategies, changing risk, changing how much you're leveraging, sticking to the same. And even if you minimize your risk, I guarantee you this as well. If you minimize your risk for the next 6 months to 0.5% instead of 1%, if you're currently risking 1% or more, and you're finding that yourself that you're at break even over a long period of time, or even in a loss, decrease your risk. And over 6 months, you'll probably end up making more money because you've not got that emotional attachment, and your psychology will be so much better. And even though you're probably thinking, no, I'm not doing that. I'm not going to decrease my risk. I'm not going to make that much money in the next 6 months. If I do that, it's the opposite. You'll make more. And at the end of that 6 months, you'll have made more money and you'll be ready to start risking more, and you'll make even more. And that's where I said exponentially, you'll start going off and it just starts snowballing. And then within a couple of years, you'll be like, oh my God, how I'm here. I'm at the level that I wanted to get to. I have got the Lambo if you want to get the Lambo. You have got whatever it was that you might have seen externally. But it all comes from shutting everything off and sticking to your strategy and staying on that straight and narrow for the next 6 months, 12 months, year, 2 years, and then you'll see a massive, massive difference.
I think I'm going to finish up because I'm not going to be able to top your monstrous rant you just done there, which has fired me up beyond belief. But I think you just mentioned one key thing there that I think could be a great end for the video, is you essentially just said, stop pursuing everything externally. The strategy that you think isn't working, whether that is from the lines you draw or the indicators you use or the information you seek elsewhere, you are likely pursuing the answers for everything externally. Mm-hmm. But the truth is, like the title of this video, the answers to all of your problems are found internally. And all of those losses, all of those problems that you get yourself into, as unfortunately harsh as it sounds, is entirely your fault.
Yeah.
They are all a consequence of your own actions, whether it is a stop loss being moved, whether it is going all into a trade, whether it is buying the Pico top of a bull run or selling at the bottom of a bear market. Every fatal decision you make, and every good decision, every bad decision, is entirely a consequence of your own actions. And when you can understand and accept that harsh reality of trading, you will become successful.
Yeah, I was just about to say that. When you can actually accept that, then you're on the road to success. But you have to accept that everything is your fault. It's not anyone else's fault. It isn't because you were working that day or you didn't have time to do this. There's so many excuses. Humans, we're hardwired to not take the blame ourselves and blame whoever else it is and lash out. But, accept responsibility, look in the mirror and realize that trading all comes down to you. And that's why we started this psychology series off with this video. It's not your strategy, it's you. So if you can just have a hard look in the mirror, accept that, and then say to yourself, right, I know I've got a strategy that can work. I'm going to stick to it. No matter what, I'm not going to deviate away from it. And then you're going to see how much success you can get from it in the next couple of months.
Do not put a timeline on your results. I would say as well. Yeah. Do not put a timeline on your results. Do not compare your timeline or your journey to anyone else's journey. But remember, this is just the first lesson, and quite a large introduction lesson for that matter, or phase or volume, whatever you want to call it. But moving forward, we're going to be going a lot more in depth into individual subjects on this matter. And as you can probably see, we have a lot to say on these topics. And this is just, again, an introduction. So moving forward, you're going to be seeing a lot more on this stuff as well. But again, more importantly, please let us know in the comments what topics you are potentially struggling with, or what you are physically struggling with, because there is a 100% guarantee we have been there, we have done that, and we can answer those questions for you. So don't be afraid to give us anything you're struggling with, and we will happily address it and cover it in future videos as well.
Yeah, exactly what Tori just said. I'm looking forward to delving deep into it. We do have a lot to say about different topics, but it's amazing. There's so many topics to cover. Like, there's literally hundreds when it comes to trading. There's so many things that happen in trading that can affect you. And you know, obviously there's the cliche ones of like a losing streak, a winning streak, but there's so much more that we're going to be delving deep into. So we're looking forward to doing that and covering those topics.
I guess on that note, I hope you guys have enjoyed this video.
Yep.
And we'll see you in the next one.
See you guys soon.
Peace.